Awesome, awesome, awesome. Okay, well, thank you, everybody. I'm sure you guys have been here for a while, and I'm the last guy, so I'm going to do my best to keep you awake, entertain you, and hopefully teach you something that you've never learned before. Well, actually, I'm going to guarantee you that I'm going to teach you something that you've never learned before. So the title of my presentation is Why Charts Lie and How to See the Truth in Them. And I thought this little graphic here was kind of funny because it's kind of reflecting the actual background. But in any event, let's proceed. Let's get the disclaimer out of the way and just talk about the fact that, you know, a lot of people really breeze through disclaimers, and I just want to spend a second on the disclaimer because one of the things that you're going to learn, from me anyways, especially with my 37 years of experience in this business, is I'm probably the only educator out there that will tell you this business is extremely hard to do and you shouldn't do it. Now, some of you might say, oh my gosh, that's a terrible thing to say. But the truth of the matter is that this business is so demanding and so difficult. And in 37 years, I've seen so many people you know, basically Wall Street is littered with graves of people. Now, I don't want it to scare you because it shouldn't scare you. But what it should do is it should alert you to the fact that this is not something you should take very lightly. If you're going to get into this business, you should look at this business the way you would look at any other profession. You know, and I'm saying profession, doctor, lawyer, dentist, there's a steep learning curve involved, and it's not really a matter of turning on some charts, sitting on a beach, putting your shoes up and making money. And I really stress that because there's an old saying in life called disappointment requires adequate planning. And a lot of people that get into this business and they think it's one thing, but it's actually really not. So without further ado, I got that bad stuff out of the way, but there is good news. The good news is that if you persist with this business, if you continually strive to learn, and that's why companies like Investors Inspiration are great, because you're going to get presented with so many different things and different options that it's going to help you lessen that learning curve. And the more you can expose yourself to, the better it's going to be for you, right? So just a quick background on me, because I think it's really important. This is me. I'm a fully funded prop trader for over 15 years now. What that means is that means I don't put up my own money. Companies give me their money, I trade their money for them, and I get a percentage equity split depending on how well I do. My background before that was a former floor trader, stockbroker, and I also currently work for a small family office hedge fund, as Renee was saying, as a portfolio manager. That's a relatively new thing. But in total, I've been in this industry for over 37 years. Now, I don't want to talk about that too much as in a term of kind of bragging, if you will. But like I said, there's so much to learn in this business. And if you want to learn from somebody that's kind of already been there, done that, got the t-shirt, I really bring a lot to the table in that manner, because there's probably nothing that I haven't studied in this business, from candlesticks to market profile, you name it, everything that's out there. I keep an open mind. I'm constantly learning. I watched all the presenters today and I learned a couple of things, even though I've been in this business for 37 years, because that is where I say this industry is hard. You're always learning. The learning never stops, okay? So I think it's important, because if you do want to learn from somebody that has a tremendous amount of experience, then I do bring that to the table. All right, so let's get into the topic of today's discussion, and we'll talk about why do charts lie? What exactly does Steve mean by that when he says charts lie? Okay, so I'm going to kind of really back it up here. And there's a lot of terms thrown around in the trading world. Terms like professional. Everywhere I go, on every website I read, it's always like trade like the professionals, right? How many of you have heard that, right? By the way, can I see questions in here? I'm sure I can see them in chat. Somebody just type something so I can see it, right? Anyways, how many of you have heard the word professionals? And every time I am on a chat forum, or I read a YouTube channel, or I look at somebody's website and they say trade like the professionals, I always kind of have a little snicker and a little chuckle, because I don't think people really know who the professionals are in this business. And I think it's very confusing, because I think a lot of retail traders think, well, if I make money from trading, I'm a professional, right? And the answer to that is no, you're not. A professional is someone who, for the most part, gets paid a salary, and in Wall Street anyways, a bonus, okay? All this comes under questions. Okay, let me just make that bigger. Thank you, Renee. Okay, there we go, thank you. So a lot of people throw around that slang, you know, professional, and I just kind of chuckle. So let's look at the real professionals, shall we? All right, so on the right here, we're looking at the pit at the Chicago Merc. Okay, anybody ever been there? Anybody ever actually worked on a pit or been on a pit floor? Well, I have. Okay, and I've worked inside, not the CME, but I've worked on the pit, so I know exactly what's going on here. Now, I want to bring your attention to a couple of things. Okay, let me just make these questions bigger here. Sorry, guys, I'm just going to make this bigger so I can see the questions. Anyways, I'll get that in a second. Now, I want to draw your attention to a couple of things. Look around here. Okay, look at what they're looking at. Remember, 95% of the traders that I work with on the floor made money. Okay, let me repeat that. 95% of the traders that I worked with on the floor made money, most of them 6 figures. Okay, notice anything here? Now, this is a modern floor trader. Okay, the pit doesn't exist anymore, but this is a modern floor trader. Notice what this guy's looking at over here. Okay, now let me continue here. More professionals. Okay, now this is actually Knight. For those of you who don't know Knight, K-N-I-G-H-T, they are the world's largest market makers. Okay, and they provide markets in pretty much every liquid asset on the NYSE and NASDAQ. And I want you to look at what they're looking at here. Okay, now you might not notice it yet. You might not notice it yet, but I'm going to get back to it. Right here is JP Morgan, right? Right here is JP Morgan. Notice what they're looking at. Okay, this is the institutional desk. These are real pictures, guys. This isn't stock photos. Okay, I've been in all these locations. Okay, now has anybody picked up on it yet? Has anybody picked up on anything yet? Anyone? No charts. No charts. There's no charts here. There's no charts here. There's no charts here. And there might be one chart there, small chart here, maybe a tiny chart up in this corner. Okay? That should ring some bells for you guys. That should ring some really big bells for you guys. If the professionals are not looking at charts, and let's just look at another group of professionals. Now, you can't really see this, but this is UBS, one of the largest clearing firms in the world for almost every major institution. This is their trading floor. Now, you can't really see, but take my word for it, because I've actually walked on this floor. There are no charts here either. These are the giants of the giants. And none of these professionals that everybody is claiming that they are using the same tools that 95% of the volume of any asset that you look at is going through. Let that really sink in for a second, okay? Let that really sink in for a second, because this was something that I had to overcome as a floor trader. How in the world, when I never use charts, and remember, UBS has been in business for what, like 100 and something years? JP Morgan has been in business for what, another 200 years? Knight's relatively newcomer, what, 40, 50 years? None of these guys ever lose money, ever, ever, ever. Unless, of course, we have another financial collapse, in which case JP Morgan could lose money. But that's for other reason, as far as their proprietary day trading is concerning, okay? So if the real professionals, okay, not the quasi-professionals, are not using charts, yet all of us poor retail traders are using charts, then, you know, that should be a real wake-up call, right? That should be a real wake-up call. So what are they looking at, right? What are they looking at? That should be the first question that goes through your mind. Okay, if they're not looking at charts, what the heck are they staring at all those screens for? Anybody know? Anybody care to take a guess? For some reason, I can't make this big. Trying to make this screen big and I can't see the entire questions. We'll try. Oh, there we go. Okay. Anybody care to take a guess? What are they looking at? Okay, I'll tell you. They're looking at the order book. Thank you. I don't know if everybody can see all the questions, but some people are typing some funny things. They're looking at the order book, okay? They're looking at the order book. Now, none of you, unless you work inside the industry, are ever gonna see an order book, okay? You're never gonna see it. It's like so protected, it's like Fort Knox. They don't just let anybody look at the order book. In other words, if you work for Goldman Sachs, you would not be able to see their entire order book, right? Now, the closest thing that I could get to, or that you'll take a look at, is like a level 2 or maybe even a level 3, right? Maybe a level 2 or level 3. But level 2 is still only 7 prices or 8 prices deep. Yeah, you can get a deeper book, but it's just the represented prices. It doesn't show the true depth of market for resting orders, okay? It doesn't show the true depth of market for resting orders. And that's really super, super important. This is a Bitcoin, believe it or not, order book. It's the only one I could get my hands on because they're protected like gold. Because this shows the real size resting at different price levels. Okay? Really important. So let me tell you why that becomes really super important. So you say, Steve, we're never going to see the order book, and these professionals have tremendous advantage over us because they can see where tremendously large orders are either parked or entering or moving in the market. We can't see that, right? So what do we do? And this was something that I'm going to kind of share with you that I had to basically learn how to do, because when I was a floor trader, I had different, sorry guys, I have somebody at my door. I had different, dog is barking, let me just close that, I apologize. I had different information available to me. All of these people, all these professionals that were looking at this, they all have different ways that they're looking at the order book. In other words, if you were working at JP Morgan, you would see not only the NYSE and NASDAQ order book, but you would also see your book. In other words, when your boss comes up to you and hands you a very, very large order to buy let's just say 10 million shares of Microsoft, the first thing the specialist does is he looks at his order book to see where that liquidity is. Okay? He looks at his order book to see where the liquidity is. And somebody says there's a dark pool. It could be a dark pool, because a dark pool is really just a intrabank market between JP Morgan, Goldman Sachs, Citigroup, Bank of America. So his boss walks up with a million share order and says, I want you to get the best price. So what's the very first thing, if this is me right here, what's the very first thing I'm going to look to do? I'm going to say, okay, what's the liquidity in the market and where are resting orders? Can you understand that? Because if I just fire a million shares into the open market, my slippage is going to be tremendous. So his whole job is to get the best execution prices that he can, okay? And that's what he's looking at. He's looking at where the liquidity is pooled, okay? He's looking at where can he get off the size that he has just been put on his plate. He's also looking at his book. In other words, he might have 20 million shares of inventory that he hasn't been able to get rid of the last couple of weeks. Okay, and so now he's got 30 million shares of inventory that he's got to get rid of, and that's what they're looking at. Okay, that would be JP Morgan. Over here in a market making firm, they have a different job. Their job is kind of the same. They're not trying to work large orders. What they're actually doing is they're getting out of the way when these big guys are working large orders. So they have a different job. Their job is to take the difference between the bid-ask spread. Now you might say, well, Steve, what does that mean exactly? Well, that means they've got to know what the order book is so that they don't get stepped on by JP Morgan or UBS. In other words, the market makers are going to make money. They don't need to make a market when UBS is in the market or when JP Morgan is in the market working an order. They've got to be in the market when they're not in that market, because otherwise they're going to get stepped on, because their business model is basically to take the difference between the bid-ask spread. Okay, so again, different way of making money, but it's really important that they see the orders that are coming into the market. Where are those orders coming from? How are those orders affecting the market? And what is happening to the market after those orders are executed as far as liquidity is concerned? Okay, so that is what's going on behind these squiggly lines that we all look at. And all of us are looking at this two-dimensional object, but we don't understand what's going on in the markets behind these two-dimensional objects. Now, I'm going to stress this even more so you guys can get a really good understanding of just how limited you are as far as the amount of information that you have. Okay, so we're going to play a little game. Let me just make sure my slides are over here. So what can we do? Okay, what can we do? We can follow the footsteps of the order flow. Let me repeat that. Because we can never ever see all the different aspects that are affecting price, we can't be on the desk at JP Morgan, we can't be at night. What we can do is we can follow the footsteps of the order flows or of the true professionals. None of us are professionals, okay, guys? None of us. And no disrespect to any other educator. There's no educator that's a professional. 90% of the volume comes from the people that I just pointed out to you, okay? That's where 90% of the volume. They are the professionals. We're the wannabe professionals, okay? Unless you can have access to deep information, you are not a professional. Unless you're getting a salary and a bonus, you're not a professional. Deal with it. But what we can do is we can exploit that. Let me see here. So how are we going to exploit that? Okay. All right. So it's time that we go ahead and we start looking at some charts. Because it took, oh, actually, we're going to play a little game first. So what I'm going to do here is we're going to play a little game together before we actually look at the charts. So here's I apologize for the blurry picture, but it's the only picture that I could get that really was a close-up of a pet. So I want you guys to play a game with me, okay? I want you to imagine this is you right here, okay? That's you. Say hi. Now I'm your boss standing right beside you, okay? It's your first day at the office. And I want you walk up to me and say to me, Steve, I want to be a professional trader and I want to make money from this business. And you say, what do I have to do? And I say, okay, Tom, what you got to do is every time, first thing I'm going to do is I'm going to say, see this guy over here? He works for Bank of America, okay? Watch everything that he does, write it down on a piece of paper, and then keep track of it. This guy over here works for Citigroup, another big institution. These two guys over here work for Goldman Sachs, and these two guys work for Merrill Lynch, and this guy here works for it doesn't matter, another big firm. And this little tiny guy over here, he works for Charles Schwab, just a little retail broker. Okay, everybody with me? First day at the office. You got your piece of paper out and you're going to write it down and you're going to basically gain information. Ready? Ding, 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 ding. Buy, 10,000, buy 20,000, buy 50,000, buy 100,000, buy 250, buy 350, buy 500,000 in total. Sell 10,000, sell 20,000, buy 600,000, buy 700,000, buy 800,000, buy 900,000, sell 20,000, sell 40,000, sell 50,000, and a bunch of other little small guys in the back rhyme in. Now imagine that you're this guy right here. How easy is it for you to make money? What the hell should you be doing? Excuse my language, I didn't mean to swear. I'm so used to swearing. Forgive me, guys. As an ex-floor trader, you have to forgive me, right? What should you be doing, right? You should definitely be buying in that situation. Is that correct? Again, this is just another example of how the true professionals in this business use information, not charts, right? Not charts. The charts are just a replica. It's just a reflection of what's going on, right? It's just a reflection of what's going on. So you can see how when I was a floor trader, it was so easy for me to make money. Let's play another game. You walk up, it's Tuesday. Now you watch these three big eyes. Now also, so what you would be doing is you'd be writing down what they were doing, and then you'd be writing down what price did. So it'd be one thing if all that buying went on, right? If all that buying went on and price hardly budged, that would be one thing, wouldn't it? Right? That would say that the market is absorbing, right? The market's absorbing all that volume. There's a lot of resting orders that are sitting there, right? But if all that buying went on and prices flew a lot higher, then you'd have a different story, wouldn't you? Right? It'd be a completely different story. Let me give you an example of what I'm talking about. So if you were writing this down and you saw all that buying and it did that, then you have a different story, right? Now, what if you saw all that buying and all it did was this? Price barely moved, right? Price barely moved. You have a different story. But can you see how you could exploit information? Okay. What I'm trying to get you to do in this class, guys, or in this lesson, is I'm trying to get you to look behind the charts. Stop looking at the charts for patterns. Okay. Stop looking at a candlestick. Stop looking at whatever you're looking at. Look behind the charts. The charts are just a representation of what is happening, and they're telling you a story. Start to make sense of what that story is telling you, and start to look at the charts in a different way. So let me go and show you. Forgive me. Sometimes you do these things and they take a while. Let me go and show you how I teach people to look at the charts and how I would actually exploit a different situation. And it's not hard, okay? I'm giving you guys, I know there's very specific techniques that I use, but if you can just stop thinking of trading like a video game, is what I'm trying to say, right? Too many people try to teach you to look at these screens like you're playing Pac-Man or something. Right? Go left, go right. Here comes the guy that's gobble, 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 right? That's not what they are. They're a bunch of people transacting business at all different times. And those people have a tremendous amount of advantage over you. Can you understand that? They're not running stops. The reason that they're beating you and the reason that you're losing to them is because they have more information than you do. And until you look at the charts for what they truly are, then you're always going to be at a tremendous disadvantage. Okay? And this takes time. And this is why I kind of started this whole webinar today saying to people that, you know, don't get into this business thinking that this is something that you're going to learn in a weekend, right? I notice a couple of my students are in the room right now, and I tell people you have to stare at these charts for at least a year or 2 years without even really doing anything in the right context before they'll start to make sense with you. Because when I got off the floor, I had to say, okay, I used to buy every time I would see Goldman Sachs and JP Morgan buying and price shot up to, like, let's say 0.25%. So I could make a rule every time I saw JP Morgan, Goldman Sachs, and Bank of America buying, and I saw price move to, let's say, 30 cents, I knew that they had my back. I knew that they were going to cover me, and that if I bought, they were going to step into the market because I saw them buying in a stair-stepping fashion, right? So for example, if I was, just to give you what I'm talking about as a floor trader, if I saw Goldman Sachs and JP Morgan buying, and this is what happened after they bought, I knew that it was probably really safe for me to buy around here because they had my back and they bought with big size. right? They have my back. I got them on my back. I don't know if they're going to continue to keep buying, but at least for now, I know it's pretty safe for me to buy. Now, if I buy and I see them buying again, and I see price does this, I can behave completely differently, can't I? I can manage this position, or I can add to that position because I have information that you guys don't have, right? I promise you guys, Richard, I see a bunch of you asking questions. I promise you I'll answer all questions, right? So let's go and see how that can play out on charts. Now, what if I bought here and they didn't, and this time they didn't buy and the market dropped? Well, I can behave very differently, can't I? I'm certainly not going to add any position. I might think about buying down here where they initiated the buying, right? I might think about it, and I can close this position relatively quickly, can't I? Because I saw that they didn't come back into the market. So that trade, what I thought was that trade, was clearly not the trade I thought it was going to do, right? So you get the idea of where I'm going with this, right? This is how I want you to start thinking from now on when you turn on your charts. Stop looking for things that aren't there. Look for what is price doing and how is it doing it. Stop trying to take the market, which is a chaotic thing, and force it into a prepackaged thing. It just won't happen. You have to accept reality. And that's what I teach people to do. I teach people to look at the charts. I teach people to accept the reality. Is the reality always right? Heck no. It's not always right. There's going to be times when I see the market do something and I'm going to be wrong. There's going to be times when I see it do this and I'm going to buy again and I'm going to be wrong. But let me tell you something. The more you accept objective reality, the more money you will make. I promise you that. I see so many people in this business fighting reality. Now, are there times to fight reality? Yes, but they're very, very contextual. And I'm never really fighting reality. What I'm doing is I'm looking to see what happened at different places, okay? So let's take a look. Let's get to some charts here and you'll get an idea. So I'm gonna keep it real, and I'm gonna show you guys my actual trading today, just to show you guys that this isn't something that I pre-packaged. Look at the date here. You guys can see this. Now, this is the Forex market. What I teach works on all markets, okay? Doesn't matter, Forex, bonds, options, whatever. It's the same thing. There are market makers, floor traders, institutions, even banks in some markets, okay? You can see these are all today's trades, and this is the money that I've made. This is not something that I pre-printed. These are trades, okay? The Kiwi, the Aussie CAD, the dollar yen, and the GBP franc, okay? So let's take a look at those, if we shall here, and see if I get this down here. Okay, so how did I use that information? How did I begin, and how should you start to begin to look at the charts to use that information? So, first of all, we'll talk about the Aussie CAD, because I think that's the one that I made the most amount of money on. Yes, the Aussie CAD, you can see here, I made about $1,000 on the Aussie CAD, a little over $1,100 on that. So this is the one that I was looking at. Now, so why the Aussie CAD in particular? Well, I kind of have a little version, if you will, of an order book that that I kind of follow. It gives me hints to what retail traders are doing, and I can't give that away because it's part of my paid course, and my paying students will get mad at me. But I kind of have a tiny version of it, but I don't need it. All it does is give me a bias. In other words, I started out my day with a bias that I should be shorting the Aussie dollar CAD, but I didn't just short it. I started to look at how the market was behaving before I just jumped in. So we take a look here. So you can see that here is the open of the day. Now, I saw from Asia on, is that right? Yeah, that's about right. Yeah, from Asia on, I saw, here's the open of the day, forgive me. So here was yesterday. So yesterday, I saw, look at the rejection that happened yesterday. In other words, this was the start of the Asian session. I saw the rejection happen quite heavy yesterday at that level, okay? And so that was like a first hint to me. Imagine that I was standing there and I saw Goldman Sachs selling that market. And then I saw Deutsche Bank add to that. Then I saw Merrill Lynch add to that. Then I saw they all stopped down here, okay? So I accepted the existing reality of that situation, and I knew that that level was going to be, or should be, relatively important, okay? I knew that level should be relatively important. So last night actually is when I placed the majority of these trades. I actually was watching the market last night when we got back up into that level, and I was looking for very specific things, okay? Now, I can't give away too much in this course, but when the different, remember I told you there's three major people that I'm looking out for. I'm looking out for the real giants. I'm looking out for the JP Morgans of the world. I'm looking out for the market makers. What I'm looking for is I'm looking for how the price reacts, and how the price reacts is going to tell me whether or not it is a giant or whether or not it's just a market maker that I'm fighting against, and what is his agenda, okay? So when I get to this level, I'm not just firing, and I'm not looking for candlestick patterns, and I'm not looking for any of these retail patterns that people tell you exist. I'm looking for the patterns of the professionals in this industry, the real professionals, because they move 90% of the bottom of the volume. Okay, so I'm looking for the volume, and I got into my first trade up here, and I added to the trade around this level, and then I took it all off down here, all three positions. And that resulted in these real trades. This is real time, guys. I didn't make this up, okay? This is pre-packaged. I did this specifically just for you. I can do this any day of the week. I can do this on any asset because I understand how to accept objective reality, and I understand what the professionals are doing and how they do it. And I took it all off. You'll notice I didn't hold anything. I took it all off, right? So that was one example of how I use that information to my advantage. Now, is it always this simple? No, it's not always this simple, but just answer my question, right? Answer my question. Did I make stuff up, or did I just accept the reality that was there? I promise you, guys, I'll answer your questions in about a couple of minutes. Just let me finish. Did I make anything up, or did I just accept the reality? I just accepted the reality, right? I saw that there was tremendous sell pressure, and I saw they didn't, when it blew through that low, I saw that they didn't hold on to it, they just liquidated. And as a matter of fact, some buy campaigns started, right? So when we got back up here, I knew something could possibly happen. And was I looking for a breakout? Was I fighting the objective reality? No, I wasn't. I was just saying, okay, this happened, do it again. You know, what was really funny about working on the floor, guys, is that most of the guys that I work with on the floor were really, really, I don't want to say dumb because nobody's dumb, but they weren't educated people. I'm not an educated person, right? I didn't graduate high school. I made boatloads and still make boatloads of money by just accepting reality. Simple. It's really not that hard if you know what to look for. So I just accepted reality. I put the trade on. I did proper risk management. That's everything. Okay. Risk management is everything because you're going to be wrong. But more times than not, you're going to be right when you accept objective reality. And I used proper risk management and I took it all off. Probably should have bought, shouldn't I? Right? Probably should have bought. So that's trade right there. You can see we're going to do the same thing here. The dollar yen, let's talk about that one because this is where I actually messed up. Yes, I'm going to tell you guys, I make mistakes. Even I'm probably the only trader that's going to tell you how many mistakes I make. Okay, so I actually watch how I messed up here, guys. I wanted to buy the dollar yen. Okay, you can see my trades here where I bought. Okay, and I wanted to buy the dollar yen. Now watch what I did, which actually I'm showing you a bad trade for a good reason. I actually bought this level right here without waiting. I got emotional. I got in the moment because I had a long bias from a bigger time frame on the dollar yen, and I wanted to buy it. I wanted to be aggressive, and I got emotional, and actually I bought right here. I made a mistake. I didn't wait to see if the professionals were stepping back in. I made a true mistake. This is a true story. Okay, you'll see I made 0 on this trade. I was right on the trade as far as my direction goes, but I took a ton of heat on that trade. And then I got so mad at myself. I got so mad at myself because by the time I recognized that I'd made a mistake, I got a lousy fill. I just exited the trade at almost break even. I think I lost 30 there. I lost $33 on it. This one I made 10, 9, so I lost maybe $17 in total. Okay, because again, this was the objective reality from a larger time frame that I was watching. I was watching this level right in here. Right? I saw that they had bought this level, and you might say, Steve, is this support and resistance? No, it's not, because it's not just a matter of support or resistance. It's a matter of understanding what happened with price and how did it react. There's two things there. Really important. Two things there. Not only does price react, but how does it react off of that level? And that's a whole nother class. Maybe if Investors Inspiration has me back, we'll go through and I'll talk about things like liquidity and a couple other things. Okay, so I saw that this level was a really important level. I didn't, and this is the takeaway here, I'm probably the only guy in this whole trading education business that tells you I make mistakes. I make them all the time, right? I didn't wait to see confirmation that the macro or the medium-term players were here. I just jumped in. I was right about the direction, but I completely made mistakes because I didn't look for the confirmation of the professionals. In other words, professional price patterns, okay? All right, now they're not head and shoulders, they're not flags, let me tell you that. They're not anything like that. They're different things that will show me that a professional market maker or a professional institution is inside this market. Most of the patterns that are being out there, that are being taught, are just a bunch of retail patterns, and the theory behind it is that if you understand emotion, and that's the biggest lie you're being told. Okay, the markets do not move on emotion, guys. The professionals who are doing 90% of the volume have no emotion at all. Zero emotion. They're trading based upon inventory and order flow and looking at the book. That's what they're trading on, okay? And obviously whatever their objectives are. Okay, so that pretty much wraps it up. I think I did one more trade. Oh yeah. The GBP, Frank, I'll go through that one really quickly. GBP, CHF, okay. See 'em? And again, this trade here was a long off of this level. And if we just go to a larger time frame, you can see that this level right here was, where is it? Right here was a level I was watching, right there. I was watching this particular level, and that's exactly what happened. We got down to that level, and I saw an institutional pattern of rejection at that level, and then I jumped in that trade, and that gave me $964. Trades today, guys. I did this morning just for you guys. Okay, so quickly, I only have about 3 minutes left. I just want to quickly show you guys a little bit about me so you can follow me. You know, hopefully you like what you hear, but don't just buy what I'm selling. Okay, just because I come in here and show you this stuff, don't just buy. Don't just run out, write me a check. I don't want you to do that. I want you to learn a little bit about me, learn a little bit about my background, learn a little bit about how I trade, and then book yourself a free 20-minute Skype consultation. It's all free, by the way. There's Investors Inspiration. Just book a program here. Just come in here, totally free. After, it's free. I'll give you an hour of my time. I'll answer all your questions. Don't buy anything yet. Go to my StockTwits page. See what's happening on StockTwits. Follow me here. You'll see I have 9,000 followers. I've only been on here since January, and I have 9,000 followers. Some people have been on here for 5 years, and they have like 30. Okay, there's a reason why I have 9,000, because I know what I'm talking about. Okay, go to my YouTube page. Watch my videos, learn about my style, watch my trading, see if I make sense to you, then come back, book an appointment. Okay, I only have 3 minutes. Let me see what your questions are here. I'll just try to do it. Richard's asked a lot of questions, so I'm going to try to answer his first. Richard asked some questions about no chance with day trading or swing trading. Is it trade a good fundamental deal with a trend? So Richard's saying, just take it off the spot for small amount. He's talking about, I don't know what I'm sorry, Richard, don't understand your question. Did you know the reason why the institutions in the markets to get rid of the Aussie dollar buying counter fundamentals? Yes, Richard, I do, of course, follow institution. I do, of course, follow fundamentals. But I've got 40 minutes here to teach you guys something. It's going to take a heck of a lot longer than 40 minutes. Okay, so yes, of course, fundamentals matter. Of course, we got to know exactly what the institutions are looking at, right? But obviously, that goes way beyond the scope of this class, of what I can do in 40 minutes, okay? So yes, absolutely. That's why my programs are 1 year long. This program is 1 year long. It takes me a year to, if it was just as simple as, you know, follow objective reality, I wouldn't be charging $5,000 and taking you a year to teach you everything. But obviously, there's only so much I can do in the scope of this 40 minutes. So yes, fundamentals are important. You said that we can see the order book. We can't see the order book. So without charts, how do you trade? How do you know the professionals are seeing, buying, selling, and understand? Again, that is the simple answer to that, PW. The simple answer to that is just to look at the easiest thing you could do is accept reality. The one biggest complaint I have out here with the retail trading world is, as a stock is moving higher, I see everybody shorting it. Moving higher, everybody's shorting it. Moving higher, everybody's shorting it. Moving higher, everybody's shorting it. And the higher it goes, the more they short it. Why are people doing that? Why are you not just accepting the reality of the situation, right? So that's the easiest answer I can do to give you guys some value in 40 minutes. Elaine says, do you trade options? Elaine, I trade everything. I trade Forex, I trade stocks, I trade options, I trade commodities, I trade futures, you name it. If I can make money at it and I see a huge edge, let me take that away. Let me say this report to you. I teach you to trade the easy situations. What I want to do, Elaine, is I want to walk in and I want to know what all the institutions, all the market makers, I want to know what the professionals are doing. And sometimes the professionals don't agree on things. That's what makes a market, because it's not every day that all the professionals line up, right? There are going to be days when, you know, these big guys are battling it out between them. There might be one winner, but there's going to be I don't want days like that. So I trade a lot of things, Elaine, because I like to get rich. I don't want to be smart. There's too many people in this business that are in this business to get smart. I am in this business to make as much money as easy as I can. Richard, have I ever been U.S. National Association of Traders licensed? No, I have never worked in the United States as a trader. I am Canadian. Okay, guys, I think that's it for my time. Thank you. Remember, don't buy anything. Go check out all the information on me. Watch my videos. If you like me, sign up for a free class. I promise you, I'll give you an hour for free. We'll talk about you. We'll learn about everything. And I'll answer all your questions.